The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back with you. I think we've got our technical difficulties solved. I want to make sure, Al, are we seeing the whole screen today? Dinners, are you guys seeing the issue? That everything cool? Awesome. Sorry about yesterday, guys. Apologize for that. Technical difficulties coming back online here. Let's. I've got Sugar up right now, but let's get right into. We kind of spent the entire time yesterday just kind of doing an analysis of the S&Ps, and we talked about that 2077 area. I just kind of want to walk through that because, as we talk about contra trades, and we talked about this as a contra trade yesterday, and I've got the December S&Ps up right now. We were pre-market. We were kind of rattling around down here. We'd kind of rallied back up into this 2070. I'm going to slow down. I'm from North Carolina. I cannot talk that fast, and I'm trying to. 2077. We're going to go to the 2077 area. And we talked about as this thing was kind of rattling back up into this area after kind of having the orange bar the previous day on Friday for that matter, and coming back up into that top of the fair auction there on 2077. We talked about a contra trade possibility for the short-term guys, stops above there, of course, with ultimate targets at 2042. What we want to do is just kind of review the scenarios as they happened yesterday. Just might be an education moving forward, just to kind of put some things in your head. But as we kind of eclipse that, based on your threshold for pain or your appetite for risk, you got to be willing on that contra trade to be able to say uncle at some point. And that's why we have to have stops. This thing rallied up into the 2097 area, it looked like yesterday. And for the long-term guys, we talked about relative to our breadth calculations on our scanner, that not being something we were even going to mess with by trying to short these inflection points and waiting either to buy support or to buy breakouts to add to the position. So, again, the long-term slant kept you in the trade. The short-term guys got stopped out, and we have to wait for some more inflection points. So, again, we try to use the breadth, identify the tide of the marketplace or the trend, the long-term trend, and try to block out one side of the marketplace trading with that trend. So, doing that yesterday, you kind of had to pass on the long-term on the 2077. But there was, in my opinion, a little bit of a trading opportunity to try to trade against that trend. And as they say, dims the brakes if you took the contra trade and it didn't work out. So, what do you do now? So as that scenario unfolded yesterday, we kind of have to re-gauge how we're looking at this. Here's our 240 short-term numbers, 2096.43 up top, 2082. And what I'm going to do is I'm going to bring up our scanner. It took me about an hour to fix that little issue we had yesterday, by the way. Couldn't understand it. It was weird. Actually, I had to take it to a computer shop and let them scratch their head for a while. As we wait for the scanner to come up here, what we're going to do is just, reference those inflection points I just stated. And this is having a problem too. Here we go. All right. So as we look at this, I'm going to go to my dashboard. I'm actually going to pull up our futures section. This is so cool how quickly this loads. And we're going to look at inflection points here in our 240, 2096 up top, 2082 down below. And as you can see, those are those latest inflection points, if you guys can see this on the chart on that particular cell. So we're going to also go back to the S&Ps and notice that we're above profiles on our weekly, above profiles on our daily, which is exactly what happened. We've added some new things, new little text mouse overs in here. If you see price has been above task profiles for 2 consecutive bars, just kind of a little bit more information, which also lends credence to some of this text situation here. We talked about that 2045 pullback area yesterday that the automated text that alerts you to. And right now, we don't talk about the 60 a lot, but right now we're going to reference our 60 and see that the reason, and there's a lot of explanations on our scanner now. In our help section, you can go into, well, this is going to pull up a document here. If you pull this up, you can kind of read quickly what these different features mean. Some of the mouse overs, some of the color schemes, top, bottom, what these mean, top of the profile range, point of control, things like that. So you might want to review this if you have the demo in front of you for the scanner. But right now, the reason that's saying top on the scanner, and I'm going to go back to our scanner, is because we're in the top general neighborhood of the 60-minute profile. And the reason I'm going through this is, I assume a lot, and that's not a good thing when they say assume, ass out of you and me. But 2090 is the top of the profile. And the reason it's still saying top on the scanner is what we did is we set it at a 10% variance above or below the top or the bottom. So if it's within that neighborhood, 10% of the height of the profile, it's going to alert you and let you know that that's happening real time. And what you can do, and I'm going to go into just to give you a broader sense here, I'm going to go into our S&Ps. I'm going to pull up our entire S&P 500, and I'm going to set this. Let's just say right now I want to find out what's at my weekly top of the profiles. Or actually, let's do bottom. Let's do that. And what that's going to do is that's going to find out instruments within the S&P 500 that are sitting at the bottom of weekly profiles. Now, you can read that a number of different ways. You can drill into this. Let's just look at Whole Foods. That's eternally near the bottom of the weekly profile. But let's look at Fossil. Here we go. So right now, the level of the market as of the close yesterday, and we're trying to, let me just pull up Fossil here, real time. Why is that not coming up? Here we go. FOSL. Okay, so what it's showing is obviously a stock that's not cooperating that well with the market moving north as it has been, but we've rallied back up into the bottom of a weekly profile. Now, if you're looking for a long candidate, I might have to mark this off the board for you. This is really just, there's no mystery here. You guys are probably following this already, but we're always trying to find trading opportunities. And as we try to find trading opportunities, we want to try to base those opportunities around inflection points. And when we try to find these inflection points by surfing different instruments over on the charts, try to find them with some of our indicators, some of our profiles, we're always going to want to, try to cut our time down, try to allow more freedom in our day and ease of access to find what we want to find. So as we look at this, we can look at inflection points here. We can try to find, the ones that we just put up. These are stocks that really can't get out of their own way, or they have pulled back into these inflection points on an uptrend. So we kind of have to look at the chart. We find these initial candidates, if you will, and we look at all the different profiles as they line up. And, if you want to kind of, make this even more of a kind of a dual time frame 6 situation, I guess, we look at this, there's no candidates there. We can look at stocks that are trading below the box on our daily, yet sitting at weekly profiles. So these are ones that have really been trading below profiles recently on our intermediate that might have either rallied back up into the weekly or are just getting ready to fall off the cliff on a long-term time frame as the market's been going north. And the theory is always we want to try to find stocks or instruments on a relative strength or relative weakness basis that are going to be able to just, when we're wrong, not going to be that painful. Try to short these things. Market keeps going north. These weak stocks hopefully won't cause as much pain if they drift up with the market. And if the market falls apart in general, these are the stocks that have already shown their hand. I say that every single day, but it's, it is I think you got I don't know what that is. It's an alarm. I think the house is burning down. All right. That's cleared up. Thank goodness. So, let's take a look at one of these. We've looked at Fossil. That was just an enormously weak piece of whatever. So let's look at Union Pacific. I'm aware we're coming up on Brett. 2 minutes. Yep, got it. All right, so Union Pacific, let's take a look at this. It's been below profiles for 5 days on our daily, and we're looking at weekly at a major inflection point. I hear you, Jay. That's always possible. So let's take a look at Union Pacific, and let me just pull that up one more time so everybody can see it, UMP. Here we go. All right, so as the scanner has already told us, we've been below profiles for 5 days. That's very, very cool that it just lets you know in a real quick snapshot what's been going on with these things as you try to drill down into opportunities. And that's the good news. Here, again, we talk about the breadth. We talked about the daily and the weekly doing what they're doing. On the upside, here's the text basically saying, you're fighting against a trend. North, if you're trying to short this thing right now, you want to have confirmations always when you're looking for a market turn. Don't have a lot of those right now. So Union Pacific, there we go. Eclipse 92.45 here, and now we're sitting, in my opinion, not at. The market's been going north, had a little bit of a move up here without question, and that particular day or week, kind of solidified that you had to kind of wait for higher inflection points or breakdowns. In my opinion, right now, you're going to be looking for opportunities again to short UNP with stops above 89.51, and then we'll have to kind of see how that settles out if we break that. 92.45 is another big inflection point up top, but the big one's 89.51 if you guys are trying to short this. I think we're going to break. We'll be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Someone's asking me to look at crude oil. Not doing too good speaking this morning. I apologize. And that really brings up another thought. I mean, you guys should really, if you want to, call in, throw in things in the den. We'll do some instant analysis. You know, the information that we use with these profiles and some of the other things that we have, it in my opinion, it makes it relatively black and white what to do. So when you guys, throw the topics up, to me and the instruments, it's really a pleasure to try to, bring some sanity, hopefully, to what you're looking at in a way you may not have looked at before, which, can be used in conjunction, by the way, with whatever system you may already be using. A lot of the things that I say, when I speak in front of these institutional gatherings at some of these Bloomberg conferences, they kind of wind me up and, let me talk about this. It's really, the first thing that I say is, you guys got a Bloomberg terminal, you might have 50 Bloomberg terminals. You should have a game plan already. A lot of these guys are just kind of throwing darts at the board and raising money. Trust me, that's true. It's quite amazing for that to come to light in my head, but it's actually true. But, if they have a trading plan, if they have a game plan, if they have a risk scenario that they follow at least, this can be used as an enhancement. And I always tell them that it's like, okay, you want to be long crude oil right now. Okay. If that's the case, I'm not saying the guy who asked the question, Russ, in the den, wanted to be long crude oil, but let's just say that an institution wanted to be long crude oil. So, what we've been looking at with crude oil, if you've been following this show, this is the December contract. we've been relatively bearish, except that, minute amounts of time on crude oil. Maybe we kind of got, bullish, if I remember correctly, before I went into a coma. I think we were looking at maybe going long above 45 or something like that if that had happened. But, the whole tranche down of crude oil all the way really was regulated by these profiles on a weekly and daily basis. And what do I mean by that? That means that, we really were, trend was in force, okay to be short, not okay to be long. Okay to be short, not okay to be long. So, where do we say it's okay to be long again on crude oil? As you see, this is our long-term view, and I don't know if for us, if you're looking at getting some questions answered on a shorter-term view, but we're going to start here, and then we're going to kind of move into those shorter-term views, because that's just the way I do things, and I think it's not a bad idea. So the long-term trend literally is still in force down. Now, the good news is for longs is that you've had a divergence here in our navigator, which I just completely accept at face value when we have lower lows and higher lows on this. So the good news is you may have some opportunities with weekly closes above these long-term profiles above 49.50. But right now, as you can see, as these, when we have an orange bar, we have it, that's an indication, new profile, just like the S&Ps on the north side. Then you've got inflection points that you have to pay attention to. And in this case, shorting against still at the trend, this is just an indication, this divergence, that you better be on the lookout for trend changes possible. But as we look at this, the long-term trend is still in force. You still got to look at these inflection points as shorting opportunities, in my opinion, and take off profit case scenarios at the bottom of these long-term profiles, 42.76. Now, are these buying opportunities to go long down here? Are the breakout opportunities on a closing basis above 49.84 on a long-term basis opportunities to go long? Yeah, I mean, you can pick battles down here, 42.76, put stops down below all day long because of this situation we just talked about, and take a shot. Trading is about trying to get a biased opinion using the leverage points we provide, which are also, by the way, right here in the scanner. Go to our futures section. And where's crude oil? Somewhere in here. There it is. And those inflection points are right there. There's the 42.76. There's the 49.84. And we're at the top of a profile on our daily. So let's just kind of let us know about that. Let's get into this for a second. So we're right in the middle of a profile with the POC, the top of the mountain. Remember, these are kind of places that you fall off one side and off the other. We're going to get right into that concept when we come back on after this next break and talk about this daily situation as we drill down into even lower time frames on crude oil, guys. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were trying to finish up here with crude oil, and we talked about this is our weekly view, and we want to reference this 4630. This is again all information. Here's where is it? WTI crude oil, West Texas crude. There's those inflection points. 4630. We're at the top of a profile here on the daily, and we just want to kind of walk through this. We've talked a little bit about history here on crude oil and you know how these things kind of come together and what the want to get the full flavor of this before we can kind of, what's that term, you got to give a diagnosis to write a prescription. Here's the POC. Here's on the weekly, relatively the same spot as we're on the top of our daily. So you know, where's the leverage? You know, how do we talk about, you know, what's the angle moving forward? Now, this particular type action, rattling around on this inflection point, not wanting to get away from it, seems to me, just from a classical kind of technical analysis standpoint, and closing right above that POC on the weekly last week, which is the daily top of the profile there. This is somewhat of a continuation pattern, and if you're going to be looking to get long this thing, which it looks more longish than shortish right now, 49.84 is your targets up top. But the good news is, you know, you can look at these inflection points as 46.30, based on your appetite for risk, and again, you might have got stopped out of this trade using the same concept lately. But again, that's part of the game. Based on, noise levels, appetite for risk, this, to me, looks like we may, start approaching finishing the rest of this profile up top on the weekly. Now, you've got to remember, and you've got some other things in your favor here we've talked about on possible turnarounds, but you've got to remember that we're still in a defined downtrend with crude oil, and this inflection point, waiting patiently for that 49.84.50 area, would be more of a riper opportunity for long-term traders to just whack this thing on the short side. So do you have a trading opportunity on the long side right now? In my opinion, yes. Is it a long-term, crude oil's going to bust the barn door open and just never look back? That remains to be seen. So the short-term situation, we're just going to kind of leave that alone on crude oil right now. I personally like to leverage against these longer-term inflection points. So that's my take on crude oil. All right, but as you've noticed, we've got some. It says top here. We've got some situations that we're going to have to get through, but we're kind of already getting through those, clearing these top of the profiles here. When we closed above this profile on Friday, that was, again, a very clear possibility, looking above that POC on the weekly and the top of the box on our daily, that we might be able to take a shot here and try to buy pullbacks into this 46.30 area. We reached a low yesterday of 45. I'm getting old and I can't see. 45.56, is that it? Let me see here. 45.56. So, is that a noise level that that you can stomach on this? I mean, crude oil, you've got to give yourself a little bit of room. So again, I think that's probably the tolerance that you need to kind of look at, especially with, what has happened the past couple of trading days on this. But I think we look relatively decent for a long trade up into that 50 area on kind of a contra trade stance. I'm going to look at. Did I drag that out long enough? I'm gonna look at gold really quick. And a lot of people ask about this constantly. This is kind of what you hope for, actually. I mean, we talked about a hole in the marketplace up into this 1160, 1168 area. Why is that the case? We had some numbers on gold that we were looking at from the past before I kind of went off the cliff there with my health. Right now, let me just go back to the long term here. This 1160 area, 1159 area was the hole from this 1125 area. We talked about that. This was something enforced when I was speaking before, and having these support areas around 1128, 1125, 1128. Those were areas we could orient stops around at least. I didn't think this thing was going to go as high as it did a couple of weeks ago, but what's happening now is we finally gravitated back down into a major inflection point that we can pay attention to, 1125. And as of this, let me see what's happened so far. As of this morning, we've reached a low of 1127. 1125, just to sum things up, is a big number. I don't mind taking a shot from the long side on something like that. You don't have, remember, weekly takes precedence over daily, over 240, over 60 down the line. So this weekly inflection point, no matter what's going on in this daily, this weekly inflection point is something you could take a stab at with stops oriented below there. I mean, this is the new somewhat defined range above this profile, and we've got to take this as pulling back, just like we had a situation there. We've got to take this pullback as an opportunity to buy this. The good news is, again, is we can orient stops around that, and we can play this game again and again and again. So that's the situation on gold. I think that inflection point is something to pay attention to for sure. All righty. We're going to take a look at the 10-year really quick just to go through some usual suspects. Similar situation here. Traveling south, I understand the market's going north, but we've got an opportunity here. We've got to kind of, I wish we had a little bit more help with the U.S. stock market, having some cracks in the armor that we could look at, which would obviously kind of in an inverse relationship affect these bonds, generally speaking. But 127.11, something to pay attention to. We're trading 127.08 right now. I'm a big fan of continuing to buy treasuries whenever you have a possibility of doing that. That's been a great trade for a long time. If it ain't broke, don't fix it. Go to work, turn the wrench the same way until told differently. There hasn't been a lot of breakdowns, and right now we're at the bottom of a fair auction on the weekly. And if we get any help whatsoever from the U.S. stock market turning south, that's going to be a nice situation. But let's go back to the S&Ps right now just to kind of figure out where we're at here. Not a good sign yesterday. The 2077 area, in my opinion, might be revisited just as a kind of close above, go back and retest support. So if we have about a 14 or 15-point pullback into that support area, we might have a little bit of a chance to trade bonds from the long side. That's the take on that. All right, we're going to go back and look at the euro really quick. I referenced this yesterday, and we talked about where it was at relative to long-term inflection points. And the cool thing is I'm going to pull up the scanner here. I'm going to go to our Forex section, and I'm going to pull up the euro. Where is it? Right there. All right, as you can see, this is the kind of the real-time level of the market here. There's the bottom of our profile on our daily. There's the bottom of weekly. We've got decent support here based on two time frames lining up. Here's our weekly. We talked about this is our profit target area down here at this 108, 109, 108.99, 109 area. And we've talked about trying to trade this from the short side forever when it offers opportunities to do so. I did a big Bloomberg brief on this. I don't know if you guys read it. I can pass it around if you guys want me to email it to you. But it was based on, this thing's still in a downtrend. Look for shorting opportunities. Put the stops in. Look for initial targets. And then when we have breakdowns past those targets, you got to load the boat up again on the short side. I still feel the same way. If you back this thing up and look at what's happened, in my opinion, this is a serious continuation pattern. What we're going through here, we've come up into the zero line. I understand that. But I think we're going to have some retracement back below those weekly profiles. This is our 240-minute situation. We're starting to break down there in the short term. But here's the not so good news on the euro. Also for longs, you've got an opportunity here on this 109.45 daily unfair low, 109 weekly unfair low. I know we've reached some targets that we talked about on those weekly unfair lows already, and we've kind of done a sympathy, a little bit of a retracement back up. But if we start getting below 109, and especially on a weekly close, I fully believe this thing will be headed in a scary situation down to par. All right, so again, look for a weekly close below this 109. We've done the damage. We've had some trading opportunities. But now we've got to sit tight for a little bit on the euro in general. We're going to look at hold on. We're going to look at silver. I'm sorry, hit the wrong thing. All right, so situation on silver. Here's our daily look. We've obviously had some movement. Apologize for those Skypes. Obviously had some movement up in sympathy with gold, but 1570 daily unfair lows, that was kind of a Custer's last stance on an intermediate, and now the weekly. So if you look at this and you look at it relative to gold, it's really on a kind of a relative weakness or relative strength situation. It's a little bit sicker than gold. And what do we do with silver? In my opinion, silver right now is a no trade. You don't have a lot of leverage here. You got a previous unfair high on our weekly you could key off of to do some day trading. But again, I think you don't have a lot of leverage with this particular product right now. And we're a little mixed up to try to take a long-term stance on it. Gold on the other hand is coming right down into an inflection point. I hope that we can count on. Let's take a look at the financials on the XLF really quick. This is something, again, this is our weekly. We like to, again, look at long-term time frames, take precedence over short-term time frames. If you're looking at going long this, you've got some, you got some stops you can orient below 24. But and you've got some great signs here that, we're trading above profiles on our daily. The only way you could look at this from the short side is getting a weekly close below 24. Guys who think the broad market's going to turn around, I feel that interest rates are not going to go higher right now. I feel like they're going to go lower, believe it or not. And I think we're going to have some new numbers come out globally that are just going to say that the world is in stagnation. The financials probably won't like that. So again, I'm looking at treasuries, buying treasuries on pullbacks right now. But the financials, you're just going to have to wait until we get lower than 24 to take a look at that on the short side. I had some emails about that. That's why I'm bringing it up. Let's take a look at my favorite trade for the past year, which is being long the Japanese yen. Right now, when we started breaking below these areas on the yen, we had to kind of back off this particular trade on the long term and just kind of sit tight. We're trading below profiles there. Again, I don't think there's a lot of leverage to this trade short side or long side right now. So this is one we're kind of sitting on our hands. But as we look back in time, I want you to, kind of understand where I'm coming from here. We had all the opportunities and reasons to stay long this trade and to buy support on the way up. But right now we're trading below profiles on the long term, and we've got to stay away from this based on that concept alone. Okay, just looking at some notes I have to look at here. Got about a minute and a half before the next break. If you can hold it before you go to the restroom. Just kidding. Let's take a look at the dollar. I'm a big fan of not going short the dollar right now. We've had this 96 area that we kind of had counted on being above or below to go long or go short. I'm still a big fan of trying to find reasons to go long this thing. We had a big breakout on our daily and then eclipsed that weekly about 2 weeks ago. I think that's a great sign. So again, I'm orienting stops below 96 on the U.S. dollar. I'm hoping we can get back up to 100. And why 100? There's that inflection point up there. All right. We're going to take a look at the NASDAQ really quick just to give some numbers here. The runaway train. I am hearing things this morning. 44.76, that weekly unfair high. So what do you do now? Here's the daily situation. God, what a scary. Yeah. So here's the big number you got to get below to even think about concentrating this on the south side. 4660, 4661. But again, there's not a lot of indications via breadth calculations. And let me get back to that. Let's go back to our NASDAQ here. When we come back from break, we're going to keep looking at the NASDAQ, cover a couple things before the opening. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com.
or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. What I'm doing right now, since we have no more requests from the den, and I welcome requests. You guys know that. And Terry, that was pretty deep, that poem. I'm from North Carolina. I don't understand it when it goes below shallow, but I can appreciate that. We're gonna take a look at the ETFs. And by the way, Basil Chapman is going to sit in for Larry next on Trade What You See. So everybody lining up for Larry, you're going to get a real treat. Also, Basil's going to be on, and that's going to start in about 10 minutes. So stay tuned after this show. What I did is I pulled up the ETFs, and you know what we want to do is, you know, all of these grids that you see. By the way, I'm looking at the indices here. I've got our daily 4-hour. I'm looking at basically the globe as it's ranked on these different time frames relative to our profile breadth. And what does that mean? It's starting to show some cracks here, actually. Man, as the world turns. Is that still on? Is that soap opera still available? Anyway, we're going to go to the ETFs. This is, you know, the 9 major ETFs on the S&P, on the the U.S. exchange, and we're going to rank these. We're going to look at our 4-hour, 1 hour, and as you can see, there's not a lot of red here. But on our daily, we're starting to show some cracks in the armor on the utilities section. So what I wanted to do is say, okay, we've got something showing its hand here in a market that's just gone incredibly higher. Starting to show negative breath, and the ETF itself is rolling over. So I want to reference this on the ETF. Here's the XLU. Here's the situation. So on the intermediate, we have broken below profiles. Starting to say profilers, dinners, 44.31. So keep that in mind. Keep that little snapshot in mind. And remember, 44.31 is very close to 45.07. So you've got a pretty serious lid here. If the XLU in general can rally just a little bit more and get back to those dual time frame inflection points, I'm going to kind of pull this up. I'm going to show you. Well, I can show you on another section, but I want to stay on this section. If you're looking to short stocks and you're looking for shorting opportunities, you've got some opportunities with the ETF XLU itself, but you've also got probably better opportunities drilling into the internals that comprise that ETF. So, here's the stocks in the XLU. Here's some. I'm not even going to do any sorts because I'm just going to kind of look down the situation here, and I'm going to say, okay, well, Dominion Resources. We've been below profiles 5 days on the daily. We're sitting there at the weekly unfair high. The market in general may move higher, which kind of rising tides lifts all boats concept. But let's take a look at Dominion Resources D. And again, we're looking for a kind of a fence to lean on all the time when we're trading. So, okay. So, oh, wow, that's a similar looking picture to the XLU. Now let's go into the weekly. And again, this may be a trading opportunity from this 71 general area, which you can orient stops above because it's kind of starting to show its hand early here. With targets down below 68.18 initially, maybe you can pick up 3 points on a 70. That's a 5% return, best case scenario. But the good news is your risk reward, in my opinion, is relatively high. And you've already got a situation that has been breaking down on profiles on Dominion Resources. Guys, that's it for today. Stay tuned for Basil next. He's replacing Larry next hour, and we will pick it back up again tomorrow. Thanks for all the comments in the den today, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.